Hello everyone, this is Matthew Frailey with BreakpointTrades.com. It is Sunday afternoon, September 15th, 2024. Got a lot to discuss in today's video on the markets. We'll cover that in a second, such as, for example, our mechanical trading systems. Our RSI 40 system is still in an open trade. By the way, if you're trading those futures, that September contract will be rolling over this week, so you'll need to roll that over to the December contract, that is MESZ 24. And again, the market's had a great rally. Nvidia rallied perfectly off that demand zone. Hope you bought some shares there. The supply and demand zones have been excellent. And on the S&P, like I said, our favored view has been since the August pullback. It's a simple three-wave corrective ABC. First rally up, wave 1, higher low pullback, wave 2, and theoretically, under the very bullish case, this would be a wave 3, which should take this to new all-time highs. That said, we have the FOMC this week, so we could get a pullback here at any time. And just looking at that, here's a 15-minute view of the S&P. Clearly viewing this as a 1, 2, 3 in the short term, eventually looking for a 4 here. It could come early this week. It could come after the FOMC. That should be a buying opportunity in one of these demand zones, then another rally to new highs, and we'll go from there. Again, my name is Matthew Frailey. I founded Breakpoint Trades 21 years ago, back in 2003, to provide advanced technical analysis, market commentary, trade ideas, and my passion, which is advanced mechanical trading systems, our 21 SPY and ES mean reversion systems, our amazing KISS systems, our volatility systems, you name it, amazing stuff here. KISS systems have been knocking it out of the park. The high performance KISS systems have been live here. You can see some of these nice gains here recently. We have this completely automated to send text messages. We're eventually going to provide an auto trading service to here where you can link your broker to it and have it automatically trade for you. That's pretty freaking awesome. And again, if you're not a subscriber to Breakpoint Trades, consider subscribing to us. You'll be extremely happy. Our 6-month membership is our best. That's roughly almost a 50% savings over the standard monthly. So you get a big break in price by paying over time. Anyway, back to this newsletter at hand. This is our backend recorder for our website subscription service. Our newsletters, instead of YouTube, they're available as an audio newsletter right in your browser. I'm going to go ahead and get this recorder started now. Hello everyone, this is Matthew Frailey with BreakpointTrades.com. First off, hope everyone had a wonderful weekend. It is Sunday, September 15th. It's about 12:30. Midday, and this is the advanced technical analysis review of the markets, trading systems, commodities, you name it. Okay, as far as the newsletter here, if you happen to be new to Breakpoint Trades, these weekend newsletters, we tend to go a little more detail than our weekly ones. These ones for me tend to take about 40 minutes to an hour. So they're for technical analysis nerds, folks that want to learn something. They're not made for short attention span, TikTokers. Okay, they're made for folks who want to put into work and learn. Okay, in life, you gotta work to achieve success. Not everything is a quick thing. All right, guys. Anyway, newsletter is divided into 6 major sections. Just real quickly on the market here. Again, everything's uptrend, long-term uptrend, intermediate uptrend, short-term uptrend as well. Remember, we favored that last pullback in the market in August as a wave 4, and we viewed the pullback into early last week as a wave 2, and market had a nice rally from there. We're viewing it as a wave 3, soon looking for a wave 4 pullback. That said, seasonality, usually the second half of September is historically weak, so we'll see if that ends up playing out or not. Like I said, we are looking for a small 4th wave pullback soon. Clearly, the FOMC is the big ticket item this week. Again, here's the news items. Like I said, FOMC on Wednesday, initial jobless claims on Thursday, various other things. All right. Commodities had a great week, all closing to the upside here. Big moves, and especially precious metals, an amazing move. Gold hit a new all-time high, closing at 2610. Silver's back over 30%. Palladium now is coming out of a big basing pattern. Pretty awesome stuff here, but And our systems have done amazing. Hopefully you guys took our recent mean reversion system trades. So let's take a look at some of those first. So first image below, item number 2, here's some of these mean reversion systems. Remember, as I stated, I have 21, well, technically 22 mean reversion systems. One of them is actually a breakout system. I would almost technically not count it a mean reversion, but anyway, they don't all trigger. There's the reason we have so many mean reversion systems is because mean reversion tends to be shorter term trades. They look, market has a pullback, it gets oversold, it's in an uptrend, they'll usually go long and they'll usually sell after you get the bounce. Or in a bear market downtrending, those short rallies, they'll get a quick trade, they're out. Mean reversion systems don't hold for long term. They're getting quick trades. They're highly profitable, around 90% winning trades, but they're in cash really most of the time. And so the reason I have so many of them is to give us as many trade opportunities as possible. So you could see during that August correction we had some of these trigger, which ended up being excellent trades. And then on that last pullback in late August and early September, we had a few of the mean reversion systems go long as well. The trend pullback on SPY and ES, all excellent trades. We closed out the SPY trend last Friday. I actually kept half of the position outside of the system, which was a good call. We sold half on that exit where the system hid, and then we actually sold the rest on Friday just to lock it in. We have remember, we run these 21 SPY and ES. We run these systems on both SPY and ES futures. We actually like to trade the MES over the ES. Those of you with the large accounts can do ES. It's whatever fits you. And if futures aren't for you, you can always substitute one of the SPY-related ETFs in place or options. It's your choice. I just give you the system of signals. But we do have one system that is still open on the mean reversions. It's the RSI 40. And you can see where it went long there on that reversal, and it is still long. That said, if you took this trade, guys, with the September contracts, MES U24, that's going to be rolling over. You'll need to roll your contract over to the December contract, MES Z24. I'll send a reminder this week, but you still need to do that this week if this system doesn't close out, if it continues to hold. Next, image number 3. Here's these trade statistics to the RSI 40 mean reversion system in particular for ES futures. Profit factor of 46, 47. Awesome. Now, what does that mean? Its profit factor is gross profit divided by gross loss. I mean, you can see the history of the system would have made $22,000 with only about a $476 loss. That's why you get such an insane profit factor. Good profit factors on systems are usually around 2 or 3, so that's knocked it out of the park. Not a lot of trades on this system here, only 43. Again, it's hard to trigger, and this is 43 trades going back to 1999, I think this system goes to. 95.3% winning trades, average hold time around 12 to 13 days. So, it's only been long for a week or so it hasn't yet hit that average. Next, image number 4, here's the live trades that I've emailed out to our subscribers this year on SPY and ES mean reversion systems. Okay. Now, because we've been in a bull market, they haven't been as active this year. Mean reversion systems, if you don't know, are much more active during high volatility and especially bear markets. So in 2022, for example, these systems did around 90 trades on both the SPY and ES futures. Okay, so this year they've only done around 24 to 21 trades. Okay, but still, they've done well. That's why we have the KISS systems. They've been long the majority of the time this year, and of course all of our other subjective trade ideas, etc. But they've still done very well. You can see these recent trades closed out. And here's the ES futures. We still have that open one that trades up about $1,400 on 2 contracts, right? But again, guys, just consider this. Let's say you were a subscriber at Breakpoint Trades and you didn't open a newsletter, you didn't do any trade ideas, you didn't interact with our community, you didn't do anything except these mean reversion systems. You didn't do the KISS systems either. Let's just say this is all you did. Well, based on $10,000 to $20,000 per trade on SPY on the side of things, you'd have made $6,500 this year. On the MES futures, you'd have made 22,600. So contrast that, guys, with the subscription cost. Subscription cost would be $600 for a year. It's $300 for 6 months. And, we run a coupon once in a while. So, I bring that up because I'll get comments from subscribers that says, "Oh, I'm not using the website enough. I'm to keep the subscription." I mean, guys, if this is all you freaking did, I mean, wouldn't you pay $600 to make, 28,000? I mean, is it a no-brainer? Just something to consider. Next, moving on to the KISS system. So as you know, we have the high performance beta live. Okay, we send out text messages. By the way, we may be eventually switching that to a different carrier, or we may even try to go to WhatsApp. These text messages are quite expensive. They're much more expensive than I thought, especially for the foreign countries. For folks in the US and Canada, it's not bad, but I know we found one subscriber in Malaysia. It's cost us like $20, $30 a month to send to him. It's honestly not worth it for us. So we got to figure out a better solution there, but for now we're going to use that. But the high performance, they're the KISS systems, but they're intraday. We're down from 30 minute to 130 minutes, 78 minute, and they've been killing it. Okay, they're quite active. For those of you who want extra trades, here's AGQ, TNA. You can see excellent trades there. And eventually, I may be able to offer this as an automated trading system where you can actually get these systems executed in your trade account. I'm actively talking to a service that would provide that. We have to test it, obviously. We got to test it on our side, make sure the signals and the trades are going through. But, that could be a viable option in the future. Don't expect that a week from now or even a month from now. It's going to take some time, but that could be coming. Okay. All right, moving back to the general market newsletter. So image number 6 shows the index sector table, what transpired last week and of course on Friday. Friday ended up being a pretty good update. As you can see, all the indexes were up. All the sectors were up except for drugs. So broad-based rally. And for the week, big rally here. I mean, look at these gains on the market. 4% for the S&P, almost 6% for the Nasdaq, 4.3% for the Russell, and 2.6% for the Dow. As far as the market sector, solid gains here across the board. A lot of big gains here. I mean, look, semiconductors up 10%, technology up 8%. Big gains here. A lot of 4 or 5 percenters, 8 percenters. Only thing down, energy. That's been weak. It did get quite oversold, so we get a little oversold bounce, but this area has been quite weak. Maybe we will eventually get a lower risk bottom fishing trades in some of these energy plays. Currencies, US dollar was essentially flat for the week. Bitcoin had a great week, up 9%, 3% alone on Friday. And should the market continue higher, I think Bitcoin should continue higher as well. Commodities, all to the upside for the week. Every single one we have here. DBC, the index, up 1.8%. Crude oil up 1.5%. It's been in the toilet, as you know, but finally bouncing back a bit. Again, everything was up here. Copper up 4%. Uranium up 9.7%. Agriculture 4%. Corn, wheat, coffee, you name it. Precious metals, big week, especially for silver, 10.3%. GDX, the miners, up 10.4% alone. And the bond market pulled back in the 10-year, 30-year treasury yield. That helped the market. Now, the thing to realize longer term that does concern me, doesn't concern me right now, but longer term it does, is the yield curve. It's no longer inverted. The 10-year divided by the 2-year yield, it's at 1.02. Remember, it was inverted the longest in history. Next, item number 7 shows the economic news calendar. Again, tons of things here, so you want to be aware of all these. Retail sales could be watched, especially on Tuesday. See how the economy's doing. Clearly, the big one, of course, is the FOMC on Wednesday. We'll see if they do a half a point. I think gold has been rallying up in anticipation of maybe a half a cut. So we'll see how that goes. And let's jump to the chart. So I've been showing Nvidia. It's one of my first charts for a while. So let's do that. Here's Nvidia. Just an absolute beauty here. So first off, Nvidia had that correction from the June highs into the early August low where it bounced off that demand zone. It was a simple ABC pullback, as you can see. I love buying ABC pullbacks, especially into supply zones, demand zones. It rallied up, formed a lower high into August, stalled at the supply zone, sold off again, bounced to the demand zone. We all had these put in here ahead of time, not after the fact. Learn how to draw these, identify these demand and supply zones. They're extremely powerful, much more effective than a simple horizontal trend line. And again, it takes a little time to get your eye calibrated, but that's the beauty is we mark a lot of these on our charts. So over time, you'll learn just by seeing. That's how you learn in technical analysis, these charting guys. You just got to see more and more and more charts, and eventually your eye gets calibrated. But nice rally after the demand zone. Now it's right in the middle of the range here. Next, image number 9, moving back to the major indexes. So here's the weekly view of the indexes. Again, big rally candle back from the previous week's down candle. So major recovery there, as you can see. Image number 10, here's the daily view of the 5 major indexes. Again, essentially, and that sell-off, 3-wave sell-off into early August, recovered off those lower Bollinger Bands, and we basically found support at the lower Bollinger Bands on that last pullback higher low. Now we're working higher. Next, chart 11, here's the Dow. Again, nice recovery here as well. It's only 30 stocks. You can see that ABC pullback into July where bounced perfectly off that trend line. I don't show the Dow that often. It's 30 stocks. That said, guys, we, for our KISS systems, we have them running on all the Dow 30 stocks in addition to all the S&P stocks, Nasdaq stocks, a bunch of ETFs, you name it. And so here you can see how the KISS system has been trading the Dow stocks. You can see what's long, you can see what's flat. Disney, a bunch of these are flat. They're not long. But you can see the ones that are long, and some of these are up pretty nicely here. IBM up 22.6%, Coca-Cola up 18%, TRV, UNH, United Healthcare. Nice trades here. Moving on to the S&P 500 charts, chart number 13, here's the monthly view of the S&P. Again, this is the bigger picture chart. First off, we ended that secular bear market in March 2009, and we've been in a secular bull market for 15 years now. So secular bull markets usually last anywhere from 15 to 20 years. So eventually this will end, but we're in this uptrend channel still. Can we make it to the upper channel line? We'll see. That said, this has been a pretty effective longer term chart, kind of like a paint dry system. Very effective but simple chart. This is a monthly chart of the S&P, and look how effective just the 14 link stochastic is. So this 50% area tends to be the dividing line between bull and bear markets. Bear markets, it falls below 50%. Would have kept you out of that, a lot of that, or majority of that tech bubble crash in the early 2000s, kept you out of the 2008, kept you long during most of this whole uptrend, from this 15-year uptrend. You could see in bull markets, it tends to bounce off the 50%. Now, it did fall below it in 2022 during that bear market, but then it quickly righted itself. So very effective, simple chart. Next, image number 14. That chart is kind of like our old BPT paint dry system. So here's an example of the old BPT paint dry system. It's better than that weekly chart of the S&P I showed you above. It's a little more adaptive. You can see our BPT 401k. When it's green, you're out. When it's red, you get out. That identifies the bear markets. When it's green, you're back in. Very effective. Again, it's great little chart. I love the name. I love the name paint dry system that I came up with. I think it's kind of funny, and it's very self-descriptive. You can see the image. That said, it's not for me. Why is it not for me? It's just too damn slow. It doesn't mean I can't have part of a 401k in some of this, but even that, I prefer to use the shorter time frame KISS systems instead of a monthly. This is a monthly chart, but you know what? If you have some friends or family who are 70, 80 years old, and they rarely want to do anything, but they want some protection, it's still a good option. Image number 15. Now, going back to the KISS systems, here's the weekly version of the KISS systems on the indexes. Of course, they've all been long for quite a long time. None of these got out in that August correction. These weekly KISS systems are also kind of like watching paint dry, but they're little still. They trade more often than the monthly paint dry system. So to me, even if I was long term, I would probably use this over the monthly 401k just because it's more adaptive. And it still, can hold trades for a couple years at a time. Next, chart number 16. Here is weekly view of the S&P, just a standard chart. So you can see on that correction into August, bounced perfectly off our demand zone. We had that drawn ahead of time, okay? And big rally last week, essentially taking back the previous week's big down candle. We're right back into that zone. Now let's see if we can pop up to another high. Now on another high, I am going to be watching. We will be setting up a second MACD divergence, okay? So be aware of that. Next, chart number 17. Here's the daily KISS system. So we had the weekly KISS system. Here's the daily. This is actually, I prefer the dailies myself and some of the intradays over the weeklies just because I'm a trader, right? I like a little more action, but this is done very well. Yes, it's been long most of the year. It's been long since last November. Yeah, it got out a little bit there in April, got back in May, got out in July, got back into August. So it's done very well. We haven't had any major corrections here, but it's either got back in at essentially break even where it got out, or like it did in here in August, it got back in a little lower than where it got out, so you recovered a little bit more. And anyway, that last smart trailing stop wasn't hit, as you can see, got close to it. It's still technically long. We're right now around this ATR here. Next, image number 18. Here's the 4 time frames with our indicators. So the cycles here, I love these cycles. You can see the daily on the upper left. Price perfectly stalled at the resistance cycle there in August. But we had really 3 technical things lining up. We had resistance cycle, we had a DeMark 913 combo, and we had these A's. That's amateur buying, lower volume. Everything lined up there. We got our correction, and look where it found support at the support cycle. You can see nice rally off the support cycle on the half day and the DeMark 9. So you had 2 things lying up there. And you can see the lower time frames were above the ATR, of course. Little DeMark 9 and A there. So maybe we see a little pullback early this week. Next, chart number 19. Here's a standard daily view of the S&P. Again, just a nice clean daily chart. So that pullback we had in July into August, like I said, or like I say here, we favored that as a 3-wave ABC corrective pullback, and that's exactly what it was. A lot of people were bearish on that. We were looking at it as a wave 4. Okay, rallied up almost back to the highs. I'm going to mark that as a wave 1. Pullback higher lows a wave 2. Theoretically, under the bullish case, this would be a wave 3. Notice that first moving average pinch squeeze was a great buying opportunity. Usually that first moving average ribbon squeeze is a great trade. Okay. So now we'll see if we can tackle these highs this week. Chart number 20, here's a half-day chart. We are into a little supply zone here, so just be aware of that. We could consolidate here, pull back a little bit. Again, a good pullback here is a buying opportunity, guys. Remember, we have the FOMC on Wednesday. Chart number 21, here's the 15-minute view. So, amazing chart. First off, back here on that correction, you could see the supply zones, price stalling at the supply zones. We then put a little bottom on September 6th, rallied up, formed a slightly higher low, almost a double bottom. We marked that as a wave 2. We filled that gap, by the way. That was a good buy down into here. Big rally up. That's clearly wave 3 of some sort. That could be done, or you could make another high here and wave 3 is pushed over. Just don't know. I don't know if this waits for the FOMC or not. We're looking for a pullback of a wave 4 here. Here I marked a couple demand zones. So I'm looking at these as major buying opportunities. We get into there as a wave 4. Like I said, we could have started this, or we could still make another high and then do the wave 4. But otherwise, this is our favored view, then eventual move up in a wave 5. Chart number 22, here's a 60-minute chart, just showing you this. No MACD divergence here at all, so it looks healthy. You can see we rallied up. We took back that broken range. This area was previous support resistance. Now it's support again. Next, chart number 23, here's the triple Qs weekly, up almost 6%, so big old reversal. Remember back in the August lows, we had 3 technical things lined up: demand zone, 50-week moving average in red, and the uptrend line. In technical analysis, whenever you have 3 things line up, that's very powerful versus just one thing. Image number 24, here's the KISS system daily. Now the KISS system did get out on the Qs on the daily, hasn't gotten back in long yet, but should we continue up, it will go back long. Now some of the high performance stuff is long, because remember, we run intraday there, anywhere from a half day to 130 minute, 78 minute. But anyway, now we'll see what this does this week. Chart 25, here's the 4 time frames. Again, just like on the S&P, the daily in the upper left, perfectly stalled to the resistance cycle to mark 9 there in August. Perfectly found support at that support cycle on that last pullback. Okay, nice move up here. We're above the ATRs on all the other time frames. Notice the mark 913 in A on the 130 minute and on the 78 minute. So we could perhaps see that wave 4 pullback here at any time to work that off a little bit. Next, chart 26, here's the standard daily triple Qs. Again, nice rally up. It is lagging the S&P. Just like on the S&P, you had that perfect 3-wave ABC pullback, corrective, and that higher low pullback into September. Almost found perfect support at that 61.8 fib. I call that the master fib, kind of like a rapper name. I mean, yes, you can get reactions to the 50% and the 38%, but for me, honestly, I could create a trading system that just simply bought or sold near the 61.8 fib. It's that effective because you can have a very tight stop, and often it becomes a major inflection. But anyway, you can see we recovered above the 50-day, 20-day moving averages, still below that last lower high. Chart 27, here's a 2-hour view. Nice move up here. Also, here I'm going to point out drawing trend lines, not just on price, but on some of these indicators. This is the 14 length RSI. You can't always draw a clean trend line, but sometimes you can. When you do that, you can get these objective signals. This was a great short signal, exit signal back here. And this nice clean trend line break in the RSI was clearly a great buy signal, just a little bit off that higher low. Okay. Anyway, enough of that. Should we get a pullback early this week, you guys now have a demand support zone below to look to buy. Chart 28, here's a 60-minute view. So like I said, almost near a perfect bounce off that 61 fib. We're counting this as like a wave 3 up. We get a pullback this week, looking at a wave 4. By the way, you got a demand zone here, which would be a great lower risk area to buy some if you're not long, or add to a long. Then I'm looking for a new high in the wave 5. Chart 29, here's the 15-minute view. So same thing. Looking for this as looking for a pullback eventually. Here's a wave 4. Buying opportunity, then another move up in a 5. And finally, chart 30, here's IWM small caps. They rallied nicely last week here. I redrew it as a coil. Okay. Got a resistance zone up in here. And small caps tend to do better especially in the interest rate environment. So if the Fed does lower by 50, maybe the Russell will play catch up, maybe have a bigger rally than the other indexes finally, as it's been lagging most of the year. Chart 31, here's the 2-hour view. All right, guys, that does it for the indexes. Let's go ahead and move on. Look at a few of these indicators. Not going to look at too many of these. Here's the VIX. Again, as you know, the VIX, it spiked up to 66 during that August 5th bottom, then gave a buy signal there. Excellent buy signal. By the way, we have a mechanical trading system on that. We call it the VIX Bollinger Band system. And it's a nice system. But anyway, VIX here, as you can see, it pulled back off the upper Bollinger Bands as the market's been moving up. Chart 32, there's the 60-minute view of the VIX. It likes to fill these gaps. It did rally off that demand zone in August, what we were looking for. Otherwise, there's a bunch of open gaps here. The ones I'm watching here in the short term are the gaps, particularly on the downside. Okay, you can see we still have a gap to the downside. Chart 34, here's the percentage of stocks in the S&P that are above their 20-day moving average. So back in the end of August, this was way overbought. It was over 90%. And right on cue, we got that quick pullback, right? Now the market's rallying back. It's coming back a little bit, but it's It's far from overbought again now. It's only at 66%. Moving to the bond market, chart 35, TLT 20-year bonds. Remember, they broke out of this nice coil back in July. It's been moving up steady eddy. Honestly, it's still a pretty decent bottoming pattern here. Chart 36, here's a monthly chart of TLT. So first off, you can see it had a 5-wave downtrend from the 2020 highs into a demand zone where it found support. And whenever you have 5 waves and MACD divergence, RSI divergence, you can see you could even draw the 5 waves on the moving average ribbon. So that was due for a bounce, A, B, and so I'm looking at this bounce as some sort of C. Now the C could go quite a bit higher still, guys, which would mean rates go lower. Ultimately, though, TLT is in a secular bear market, right? Don't expect rates to go back down to where they used to be in the old, in the 0% in 2020. They're going to remain elevated for many years, but they could pull back more, especially if this works higher. Chart 37, here's the 10-year treasury yield. They move opposite to bonds, so I've been favoring this ABC pullback from 2023 when it hit 5%, and that's been playing out. There's a demand zone down here. We're testing the upper portion of it, so we'll see if we get down further into it or not. Chart 38, another weekly view. This is that ABC projection I drew out, which is playing out. I do think this area down here around the 3.2, 3.25% will hold, though. That's big support now. And here's the daily chart. We do have a MACD divergence down here for now, but it's had a really nice pullback from the August or April highs. Next, here's the yield curve. 10-year divided by the 2-year. This one is not divided. I have this one subtracting. You get the same thing, but it's no longer inverted, right? You can see how long it was inverted, longest in history. In the past, whenever this typically goes back uninverted, usually your recessions start sometime after, okay? So that's why I do think we're going to be having a recession in the future. I think it's inevitable. That said, as one of you guys pointed out to me, another yield curve is the 10-year divided by the 3-month. Okay, most of the time it gives similar or same signals. That said, there's definitely a divergence between the two. While the 10-year and 2-year are no longer inverted, the 10-year and 3-month is still very inverted. So, perhaps this needs to go uninverted as well for that recession as well. We'll see, but wanted to point that out. Moving on to the third part of the newsletter here, looking at a few of these market sectors, get through these quickly. Here's XLK again. Every sector was up last week except drugs, so everything rallied nicely. You could see technology rallied nicely off that 61.8 fib 200-day moving average. Chart 43, semiconductors, same deal, rallying off the 200-day moving average. Chart 44, biotech, recovering those moving averages. You can see the last pullbacks, rallies off the supply and demand zones. Remember, always an excellent guide to know where those are. Chart 45. Here's the sector that really interests me this week, biotech. Absolute beautiful chart here. Look at this chart, guys. Ascending triangle. Looks fantastic. Chart 34. 46. Here's the weekly. Beautiful ascending triangle there. This puppy could rally up. First target would at least be this 120 area. So, looks good. And a leveraged way to play biotech is LABU. Triple leveraged ETF, kind of a coil-like pattern. That said here, these coil, I can draw 4 waves. Possibly you could get a little E here, higher low than a breakout, but either way, it looks great. Chart 48, biotech or financials. Nice pullback. This has been a super strong sector. It's kind of a little flag channel here you could watch. We'll see how this responds this week, the FOMC. Chart 49, consumer staples. That said, this defensive sector still remains extremely strong in a parabolic uptrend. Look at this. Crazy. Chart 50, industrials continue to hold up very well, rallying again. Chart 51, here's utilities. Breaking out again. So here I just have an uptrend, steep uptrend line to monitor. Chart 52, one of the sorry about that, I lose my train of thought. One of the utility stocks, cup and handle pattern. Again, it's been very slow, just very slowly moving up, but it has been. Chart 53, XLE Energy did bounce off that low, bouncing off a little demand zone. Still quite weak, a lot of resistance overhead. This sector has had a nice correction consolidation from those April highs. We are going to have some good swings though pretty soon, I think, on an oversold. Chart 54, here's oil services. Now we did break this coil-like pattern a couple weeks ago. We're now into a little demand zone. You also have an uptrend line to monitor, so we'll see if this can hold, as well as that 200-week moving average. And chart 55, China, Chinese market. FXI, little bounce, so far a little lower high. It's got to take out some of these moving averages and downtrend line. Could be a slanted inverse head and shoulder though. You can see the last time, rallied right off that demand zone. Now, moving to commodities, all of which had an up move. Every single commodity, guys. So here's DBC, that's the index. It's been at the bottom of this coil, slightly breaking the 200-day moving average. Trying to recover it here. So if it recovers here, continues, that would just be a little Pinocchio fake out move below last week. So it is trying to recover here at the bottom of support. Chart 57, here's the daily. Again, you can see it briefly lost that big support, that double bottom support from December to August. Formed a doji last week, which we said would have been a good trigger for a long, which it triggered on Thursday. So it's now back above that area. Chart 58, here's crude oil. Remember, broke down from that coil last week. Crude oil has been quite weak here. Anyway, little bounce back doji last week. Now that broken trend line above is resistance now. Chart 59, here's the daily. You can see the coil. We finally lost that coil trend line a couple weeks ago in demand zone, as you know. Bounced back a little bit last week. Unfortunately, that broken trend line is now resistance. Chart 60, natural gas, also had a nice week. Nice rally off that basically double bottom test there. You had a second MACD divergence. We put it out as a long idea back there in August off that wedge, which played out. Technically now you got kind of a horizontal rectangle here, pulling off resistance late last week. Chart 61, copper, also continues to bounce. Remember, likely completed that ABC correction there into August. Chart 62, DBA, agriculture, up 4%. Remember, this is the pattern I've been showing. Cup and handle from early in the year, which broke out. I showed that well ahead of time, gave a fantastic swing lasting months. Then it had a big long three-wave ABC consolidation. And like I said, if that's correct, this should go theoretically to new highs. Chart 64, here's the monthly, just a textbook bull flag on the monthly. Here's your next supply zones. Remember, we stalled that first one early this year, back in March. But you can see the next ones. If this plays out, I think this makes it up to those next supply zones above. Would be an excellent swing. Chart 64, there's the daily. We had a higher low, so if you want a tight stop, you could use that higher low as a stop for a swing. By the way, you see that first moving average ribbon pinch? Always a fantastic area to go long. Chart 65, corn. Remember, I had this as a long idea back in August from this falling wedge. You had a nice tight trigger there. 17.18 was your trigger. Stop at 17. So you essentially risked 18, 19 cents. And guys, that's what trading's about. It's not about having a crystal ball and knowing exactly what's going to happen. Okay? If you subscribe to a service and they tell you this is what's going to happen, here's the scenario that's going to happen, you need to run because no one knows. Okay? Market can do anything it wants. Trading is about identifying these areas where we can have a very good risk-reward trade with a tight stop and you make a lot more if you're right. Okay? That's what trading's about. That said, I think I am right most of the time, but I'm not always right. But you don't have to be in trading. Enough about that. But anyway, this thing still looks really good. Kind of an inverse head and shoulder look to it. Chart 66, here is coffee. Boom, big up week, 10% in a week. Hopefully Starbucks doesn't raise their prices on that. By the way, guys, do they ever lower prices when coffee has a big correction? Hell no. Jabber 67, URA, uranium, big rally off that near that support area last week. Up 9.7%. Jabber 68, Bitcoin up 9.8% for the week. Again, I favor that last pullback there in July as a wave 4. I think this eventually goes to new highs in a wave 5. So, by the way, here's a long uptrend line. So, if you think this is the correct count, you could simply be long one of the ETFs or Bitcoin itself, and hopefully it goes up there. Jabber 69, here's the shorter term daily view. So we got a higher low in there for now. Now we'll see if this can work up. Moving to the US dollar, Jabber 70, US dollar weekly. Pulled back last couple weeks. So been having this pattern in for a while. We viewed that last bounce as a fourth. That said, there is pretty big support down here around the 99 area. Jabber 71, here's the daily chart. It's possible more than likely, it looks like we probably completed the ABC last week. I was wondering if it would have went higher to that downtrend line. Either way, the FOMC is going to affect this big time, obviously. But right now, it looks like an ABC. And Jabber 72, here's the monthly chart. I haven't showed this in a long, long time. We drew this as a wave 5 way back in 2022. And boy, it's been the correct pattern. I have not adjusted this chart, guys, for a couple of years. So it is played out. Could the dollar go to the lower portion of the channel? Well, we'll see. Moving to precious metals. Fantastic week. Gold, new all-time high, up 3.4%, closing at 2,611. Man. No changes here, guys. I mean, it's still in this very strong uptrend. It's in a bull market. It's in a, it's still working on this wave 5 of 3. Like I said, this wave 5 of 3 can continue to extend. When it does end, I'm looking for a wave 4, but for now it's still in that pattern. Jabber 74, here's the daily. Again, here I drew a wedge, but it could always blow this wedge out, but again, just continues to be good. By the way, we do have some MACD divergence now, though. Be aware of that. We didn't have that MACD divergence before, so we do have some divergence here now that we didn't have. And Jabber 75, here's the monthly view of gold, this cup and handle, this ascending triangle. I mean, just textbook. We're in this wave 3 on a pullback. When we get one correction, I'm looking at this as a wave 4. Here's the demand zone. But guys, I'm looking for new all-time highs eventually as a wave 5. I think this eventually goes over 3,000 an ounce. Jabber 76, silver weekly up 10.3%. Fantastic looking chart. Broke out of this ascending triangle earlier this year in the spring. Back tested it twice. The broken trend line became support. Last week's rally looks fantastic here. Jabber 77, here's the daily. So you had that 3-wave pullback. Your first swing stop would have been there. And I think with last week's higher low, you can move that swing stop up to there. Jabber 78, here's the monthly chart. Remember this monthly 4-year coil I was showing early this year in the spring? First solved at the supply zone, but guys, I think this eventually goes to that next supply zone in the 40s at minimum. That would be an awesome swing trade. And Jabber 79, here's the 50-year chart going back to 1974. You can see silver basically hit $50 twice, once in 1980 when the Hunt brothers were acting like the Duke brothers from that Trading Places movie. Remember, they were trying to corner the frozen orange juice market. Got absolutely their ass handed to them. Well, Hunt brothers did as well. I heard they almost went bankrupt. Not surprising. Tested it again in 2011. And I think this eventually goes back to there. Doesn't look like a big 50-year ascending triangle. That's crazy. That said, guys, the next time, while it may pause at 50, I think it blows through it. So I think silver, man, maybe we can see it at 75 bucks eventually. Next, Jabber 80, palladium. Remember, palladium has been lagging gold. It has been basing here for the last year. I put this out 2 weeks ago. Last week, breaking the base, up 19%. Guys, this could go a long way. I mean, it's just coming out of an extremely oversold base. Look at the moving average ribbon, all tightly wound. Jabber 81, here's the way to trade it. PALL, the ETF. Up 17% last week. Hopefully you guys bought this. I mean, this could still go a long way. This could be a swing trade. Remember, this is a weekly chart. Moving average ribbon is tightly wound. What does platinum look? It was up for the week. It's coiling here. Again, both platinum and palladium have lagged gold and silver. Chart 83, here's GDX. Held that trend line last week. Here I added another trend line to watch. That could be a resistance, kind of a wedgy thing. Otherwise, if we break through that, you have the channel above. Chart 84, here is the 60-minute view. Perfect found support at that 61.8 fib. You see that, guys? Always look for good trades around that fib. It's a very low risk area to do so. Anyway, no MACD divergence here, so this still looks healthy to me. Remember, this area in particular is going to get gold, silver, the mining stocks. The FOMC is going to be a big deal. I'm not going to go through a bunch of individual names, guys. A lot of these precious metals have done extremely well this year. Here's CDE. It's a silver stock. Big breakout last week to a new high. By the way, I added a long idea back here in February, March out of this nice base. So look at the percentage move since then. You know, it's up 200-300%. And here's the monthly chart. Boom, out of this coil into a supply zone. But you can see, I mean, this could have a long way to go over time. Final part of the newsletter, let's cover our trade idea. So YUMC, it's been on my list literally for a couple weeks. Finally trying to break last Friday. So let's hope this can follow through. Target areas around the 200-day moving average. Chart 88, ABUS was a beautiful long idea from a couple weeks back. Gave a trade, hopefully took profits. Chart 89, CRDF was a nice base. Finally broke out last week, Thursday and Friday. Beautiful coil, nice base, excellent trade. Chart 90, Dollar General. As you know, this thing has gotten smashed from the 2022 high to the bottom of this demand zone. I put it out as a oversold bungee bounce play. Bounced back a little bit last week. We'll see if it can follow through, but boy. Chart 91, Chubb was an awesome trade out of that coil. You know, you're either out of it, or if you're still long, I'd put a stop right there at that higher low. No reason to give it any more room than that. Great trade. Chart 92, Duke Energy and Utility broke out from that tight coil a couple weeks ago. It still looks okay here. Let's see if it can break out again. Little flag. Chart 93, AAOI. Another idea from a couple weeks back. Had that flag pattern out of this base. Broke out last week. Nice trade again. Chart 94, Intel. The dog, it has been absolutely crushed by the competition, AMD and Nvidia, but it is at the bottom portion of this channel. You could have a tight stop with a long there if you choose. Chart 95, GPN, Global Payments, little higher low last week. Still looks decent to me. Supply zone is above. That could be a target. Chart 96, GURN. Here's some setups that have yet to trigger, guys. GURN. I've had it on the list for a while, but still looks okay. Downtrend line is your resistance for a long. You can see it stalled on Friday there. Chart 97, Nova, absolute textbook. Look at this beautiful coil, rounded bottom. Looks great. Chart 98, BYON, nice flag. Resistance 225. First target area is up there. Chart 99, NEO from the Matrix. Bull flag looks great. Chart 100, GTLB Lab, nice tight coil. By the way, there's a big open gap up there that could be a target. And how about some pizza? Papa John's, nice tight coil, looks great. All right, guys, we will see what happens when futures open in this week. Again, appreciate all your support, all our subscribers over the last 20 years, our YouTube subscribers. Please like, comment, subscribe. Really helps us out. Tell your friends. Trying to grow the channel. Trying to grow the website. Trying to do the best I can. Anyway, have a good rest of your Sunday. Take care.